Nordic American Tankers stock, the NAT. Let's do another look back at NAT. We have some dividend reports, a bunch of international oil news, contango. Everything's crazy. The stock has come way down. I want to overlay some charts on top of this. So let's compare this to the general like S&P. Let's look at the oil volatility. This is Brian Lewis with MMT Investing, and things just changed. So, I mean, this thing's absolutely nutty since Feb 20 here. So we got a slight move down, and let's go ahead and overlay the S&P index on here. So we can see where we're going here. So on Feb 20, the S&P did this huge rip down, and Nordic sort of went down as well. This was Nordic American's version of the crash here. It did go down some, and then it bounced pretty close to the same height on the recovery bounce, which was a huge jump. And this is pretty interesting here. I had sort of a delayed up movement, parabolic, and then kind of back down below. Okay. So just trying to get the shape of the kind of contraction and expansion phase that we get here in the intermediate cycle, which is Nordic did go down when this went down, and it did go up when this went up. And I think we can just kind of average the angle here of the down angle and the up angle here. And then we can take a look at the stock and take a look at the S&P. So we're out here on this bull run on the S&P and in the credit contraction cycle that we have now. It looks like we have another month or month and a half in this credit contraction cycle. And there should be another move down here in the S&P. And I don't know if to expect what kind of move to expect when the S&P comes down, because we just got a big reaction down and we're already kind of below the trend line. But I would expect the credit contraction to be pulling down on this stock while it's coming down, and then we should get some more up moves. And it has mostly to do with just the timing on the S&P. And we can do let's do some MACDs, and let's do some looks at this thing. So as far as timing goes, you can go watch my videos on the S&P. We're just tracking the cycle and trying to track the movements and when we switch from bull to bear, kind of on the MACD. But let me get rid of this thing. And what's a good one? Let's do the oil volatility and see what it looks like next to oil volatility. There's a big correlation there. Okay. All right, this thing goes up with oil volatility. Well, it came down here while volatility was going up. And it went up here while volatility was going down. It doesn't correlate that well. Let's pin this to the side. Yeah, it's kind of swinging inverse here. Yeah, I don't think that map's close enough to be too useful. Just that the oil volatility in general is just bad for the oil industry in general, which is in turn good for the tankers because they're getting a whole bunch of extra business to store this oil when the oil prices are down. So now the oil volatility is coming down, but not down to a reasonable level. It's still at a very high volatility kind of level here. And also oil volatility and volatility on the VIX are looking to move up again. Just looking at the technicals. So that's not too useful. The oil volatility is not that useful. Let's look at some MACDs and see. And this is on the hourly. I'm going to switch over to dailies. All right, so let's take a look at the swings here. We got a double kind of bull swing up here, and we crossed back into bear territory down here. But we're still super, super bullish here. So let's take a look at when did we start here? Yeah, Feb. So since the beginning of the crash on that whole leg down in the stock market, we were almost entirely bearish on the bottom side of the MACD. And then we've been waving around. So this is all super bullish here. And then we went into the bearish zone here and got some down moves. So basically on the MACD, if you stay above this middle line, that's bullish. And this kind of bounce above the middle line is very bullish, and that's why you get a higher high here. And then the crossover to down here is not good, it's bearish. And then all these wiggles on the bear side is further bear activity. And then the crossover here is bullish, and a bounce on the bullish side is very bullish. And we are still way up here in bull territory. But we're coming down sharply. So this is going to be coming down until it V's. And if it V's in bullish territory, then it's going to be a big move up. And if it crosses all the way down into bear territory and bounces down here, then that's not so good. Because activity down here on the bottom side is bearish and activity up here is bullish. Just look at the MACD on the dailies here. And the response that this has had to the credit contraction. Wait, where am I, Feb? This is the crash here. Yeah, so we started the crash. We were already in bearish territory at the beginning of the crash. And we continued bearish during the crash and then switched over here. And so this since the beginning of the crash has been a bullish trend the whole way here. And this reversal is not a bearish reversal yet. So let me wipe this and take another look. So yeah, we start the crash here. Okay, so this is the activity we get during the huge crash in the market, is just a little bearish activity and then a switch to bull territory. And yeah, we're just way up in bull territory right now. And the only way that this stock goes bearish again is if it gets down here below the center line. And then if it doesn't make it back above, then that would be bearish. So right now, there's no kind of reversal indicator or anything like that to say that this downward move is going to stop. It's still coming down. It is sort of decreasing, I guess, the angle. Can't really tell. You can't tell what it's doing right now. But this move is sort of fighting against the downward movement. It looks overly bullish to me right now from where it is. It looks like we're gonna get a bullish bounce probably, but let's go back to the hourlies and see what this looks like. Yeah, so on the tiny scale here, and it goes all the way back here. So on the hourlies, you can see a lot of bear side activity on the first part of the crash, and then mostly bull side activity on the small scale. So this right here looks like it's going to stay bearish on the short term. So sort of on the day trading look, this looks like it's coming down. In order for this to go up in the immediate term on day trading, this needs to cross back over into bull territory, and it doesn't look like it's doing that. It looks like it's turning over here. So the very short term looks like it's going to stay bearish for right now, and the longer term looks long-term bullish. So this is the kind of thing where you want to, and this is not investment advice. This is the kind of thing where you want to look for a good entry point to get into the stock. And then I've heard a lot of people mention the dividends, and the dividends are really interesting on Nordic American here because the dividends just jumped to 14 cents from 7 cents. It doubled. And I mean, 2 years ago it was 1 penny, and now it's 14 cents. So the stock, if you go back and look at it, got like weeklies and see what that looks like. So if you go back and you look at the stock back like 2 years ago, it was not doing so hot. Wow, this is crazy volatility. So yeah, where are we at on the weekly? Oh, okay. Yeah, this is all super bullish as well, like even longer term. So the immediate trading looks bearish, and the medium and long term look bullish on this. And if you go back to about 2004, this area here, so Nordic American Tankers dividends were over $1 when it was in this range, and that's when oil was expensive, and it's a completely different business model. So right now, what's happening is the oil prices have crashed so low, and there's so much oversupply that they're having to store all the oil on these tanker fleets, and they're not being used to actually ship oil around. They're just being used to store oil, and they're lined up at the ports, like in California, around Texas, and China and Singapore. There's just lines of fleet, like just there's like 20, 30, 50 boats just parked, and they're just waiting for the oil prices to come back up, and they'll just sell the oil when the prices come back up. And they're just storing oil short term right now. So it's a super weird business model, and people keep talking about the dividends on Nordic America are going up, and they are going up, but the dividends change quite a lot with the oil prices, and it's really not a dividend stock. It's really more of a speculative play. And the MACD is saying to be careful in the very, very short term, and then it should be bullish in general. And the cycle is saying something similar to that. Pretty much the cycle is saying that we should get a general down movement. But just comparing this graph to the S&P, the down movements in the S&P don't pull this down that hard. So I would just factor that in a little bit and look for the immediate day trading to be a little bearish, and then uh, just try to find a point to get in this guy. That's what I'll be trying to do. And what else do we have going on? There's several other tanker companies. I've seen people comparing Nordic American to DHT, the double hull tankers. And I think Nordic American has 20 I think they have 23 of the Suezmax. They're kind of the medium-sized tankers, and they're all double hull tankers. And DHT double hull tankers is all VLCCs, which is a larger ship size, but it's a similar idea. Those are both kind of smaller, crude-specific fleets that should be getting a ton of the oil storage work for a long time. I mean, the oil prices are supposed to go up. Let's take a look at this thing. So I wonder if I can get. No, I don't think I can get like oil futures on here, but I can just draw it. So the oil futures and the contango, the thing that is happening in like the USO, the US oil ETF, and the UCO, the ultra crude, the West Texas oil, the ETN. What's happening in those right now is contango, where the oil prices now are so low, it's like a barrel of oil is close to the price of like a cup of coffee. It's not that low now though. It's like $20 or $30 now, but it went to a low, and the futures prices of oil is increasing for it looks like 2 months, and then it's decreasing kind of to the end of the year is what we are seeing in the oil prices. So as you get the 1 month oil contracts, this month's contract is lower than next month's, and then that contract will be lower than the next month. So this is contango when your spot price is lower than the futures price. And this happens occasionally. And it's not always a huge deal, but it's a huge deal when your contracts are ending on a super low price and people don't want to get rid of the oil contracts. And so I guess this is kind of a little bit off point for the tanker videos, but everyone is trying to look up oil and oil tankers, and I wanted to explain like the UCO and the USO real quick here as the contango. What happens on those the ETS and the ETNs that have the oil contracts is that you have to sell this month's contract at a low price. It gets kind of squeezed lower than the real price because of the contango, because the contracts are coming to an end and people just have to dump them, or else they have to take physical delivery of oil. And a lot of people that are speculating aren't going to take physical delivery, so they're just selling at whatever price they can. And the USO and the UCO just automatically, they have the futures contracts built into those funds. That's what they are. They're future contract funds. And when you get this contango situation where you sell cheap and then you buy the next set of future contracts at a higher price, you lose value in the fund, in the USO and the UCO. So I see a lot of people saying they want to go long on those, and there's just this contango risk built in, and this is a really big risk when it's at a bottom. But again, here, like this will probably sell low and then buy high again. And those funds just kind of lose their gains. It's not really like you're buying the price of oil. It's a weird structured fund, and the ultra crude, the UCO, also it's a 2x levered. So on all the volatility, you're losing percentages on the down moves. Um, so that's just a look. If you're trying to go long on the USO or the UCO, this contango is gonna be hurting the up moves, and that's looking at it over like a couple of months or something. And this isn't a couple of months because I'm on the weekly chart or something, right? Yeah, so it says 2023. But I'm just drawing at like 2 months worth of just drawing a 2 month drawing here. And this is how contango is affecting the futures contracts on the oil prices. But the spot price itself is supposed to increase for a couple months and then decrease. So how this affects the tanker companies is they're storing a ton of oil right now, and they're just waiting for the price to go up, and they're going to be selling oil. As soon as it's profitable, they can start selling, and then they can start shuttling it again, which should be pretty soon they can start selling. So they'll be selling it and shuttling it and stuff all through this whole period. and then there should be oversupply even beyond this. They should still have oversupply here, and this is out like 3 or 4 months or something like that. And then it gets kind of tricky because there's still oversupply, so the boats will get full of oil, but then the oil prices are coming down, so do they want to hold on to it? It should still be a profitable price. It should still be a profitable price. They should still be doing business. At some point over here, it's going to be, well, we'll have to see what really happens. But the projection is that it's not going to be an oversupply where you need a bunch of tankers storing the oil anymore, but you still need the tankers to ship the oil, and it's going to be really cheap oil prices. So that's a weird dynamic. I think where they're going to be less profitable. It's not going to be those in crazy high like daily oil storage rates or anything like that. It'll just be normal business, but they should still have good business. So it looks like a really interesting business model out over over the next year. And right now, yeah, on the MACD, we're looking good. Looks like it's still going up. So I mean, we're kind of long-term bullish, medium-term bullish, and then a little bit more bearish stuff in the immediate on the MACD. And that short-term bearish may coincide with a downward move in the credit contraction cycle, which would be more bearish than the charts are predicting right now. But it didn't. The credit contraction cycle, the first one, didn't pull the tanker down very much, and this is the wrong time scale. Let me get back to like hourlies or something. So that's kind of the general look at Nordic, but I can take a look at some other tankers. Um, I mean, there's DHT, the double hull tankers, is a very similar business model, and then you have some bigger fleets that are crude specific, like Euronav is EURN, and TK tankers, TNK. Those are the crude fleets. TKN. I'll put these in the description. And EURN is Euronav, and DHT is the double hull tankers. And then this is Nordic, and those are the big crude specific fleets that should be super busy now and busy into the future. But there's also Frontline has a bunch of crude tankers, and Zakos has a bunch of crude tankers. And even right now, in the middle of this oversupply, the product tanker fleets and the chemical fleets are switching their boats over to store crude oil. And that's a really interesting thing for like Scorpio tankers, which is STNG. That's a product fleet that is starting to do really well now in this situation. And I don't think that's going to take any business away from these guys, because these will be the main crude storage fleets, but they're full. And then there's some smaller one like top ships, TOPS, and there's like PXS as a tiny product fleet. So there's some fleets that weren't crude fleets and now they are crude fleets just for this oversupply, which could be over the next couple of months. All of these fleets could be completely full. So as far as longs on tankers, I think Nordic American is the craziest because, well, where's Feb? Here, right? So, I mean, it was less than $3 and it went to like 9. I mean, I think that's the craziest swing of any of the tanker fleets. Like, that's just an insane swing up. And I think all of these are going to have a very similar kind of chart as far as the next, like, the next month or something during the credit contraction cycle. They'll be fighting against the cycle, but the up moves should be really strong. And you can watch the S&P kind of chart videos to figure out when those credit cycle up moves are going to be. And then I don't know if it's worth it for me to try to go long on these. I don't really want to go long on these during the down cycle, even if it's a slight down. I just think that's too risky. But I do think that this general kind of direction that we're going, we are kind of underneath it now, and the technicals are still pretty bullish long term, but still kind of bearish in credit contraction short term. Yeah. So for me, I'm waiting a little bit to see a really good entry point on these, and then I'm trying to figure out what's going on. Like Nordic American has a good balance sheet, DHT has a bad balance sheet, but those are both looking really good, and I don't think the balance sheets are playing in right now because there's just a ton of cash in this industry. And then like TK and Euronav and Frontline is FRO. Those are the really, really big fleets. Those are big companies, and their stocks are less volatile, so those might be less kind of crazy to do swing trading on. But those might be good in a month or so for more stable kind of one more stable kind of move. I think I'd rather swing trade. I think I'd rather swing trade the crazy ones, DHT and NAT. I think they're gonna make bigger moves than these ones. Um, but TK, I really like TK's chart. It's just really consistent and really bullish. It's not going crazy like this. And STNG is one that I think is really interesting now that the product fleets are starting to do crude storage, because STNG Scorpio Tankers has a huge product fleet, and they could really, really maximize out on this oversupply using product boats. And then Tops and PXS, those are not quite as pretty of charts, and those companies are a little weird. I don't really trust top ships. Like they're you can go see my video. I'll link to some of these company videos from this one. But yeah, PXS I thought was interesting. I'm interested in PXS and STNG as kind of a late rebound here over the next month or something to maybe start picking up, kind of like Nordic American got this crazy spike here earlier. Really, TK got the earliest spike because they were up even from the beginning of the crash. Like TK started going up immediately, and they're just on a consistent bull run the whole time through the whole credit contraction, everything. And so this is really like my stable blue chip one, and these are kind of the crazier, more speculative, probably more volatile crude fleets that get a longer term crude fleet outlook. So these crude fleets should be good over the next year. The whole year, probably they'll be completely full staffed, but they'll only have the crazy high crude storage prices for another month or something, which is a long time, and it should outlast the credit down cycle. And these ones, when you get into the product fleets, get interesting just in the immediate short term, because these will be the first ones that stop storing crude and go back to the product business. And they should be busy too. They should be busy, but not oversupplied. Except right now in the short term, they might get a big bounce. So that's a bunch of them. And then I took, oh, what was oh yeah, there's a fleet called Ardmore. I forget their symbol, which is another product fleet that looked really interesting. ARD, I think. I'm not gonna write it because I can't remember it, but Ardmore was another product fleet that looked interesting. And then I saw a bunch of fleets that had mixed mess of ships that were container ships and chemical ships and like dry bulk shipping and all sorts of stuff like that. And none of those companies are looking any good at all, even if they have some tankers. Like you need an actual tanker fleet that can store fuel, and then you need to see what's in the fleet, if it's actually crude tankers or if it's product tankers. It makes a big difference in the business model. And these dividends and the balance sheets aren't really looking like they're affecting much right now because there's just so much business that like DHT's bad balance sheet doesn't look like a problem. So that's kind of the outlook. I'm not really viewing these as dividend stocks, really. I mean, I guess maybe if you find an entry point and you like it for a year or something, I don't know how this business model really looks after that, but you could get a little bit of a dividend on the thing. But I mean, like a 12, what is it? 14 cents a share dividend versus swinging from $2 to $9 in the speculative. I mean, this is a speculative trade, not a dividend stock. So that's the outlook on oil. And I was also going to mention the long-term kind of futures outlook of the oil prices. It's down, it's down. Like Jeff Snyder, I'm watching Jeff Snyder a lot, and he's been talking about the futures prices of oil, and the price projections are just decreasing all the way out to the end of the year, and it looks really bad for the price of oil and for the whole energy sector long term. And also the news on Russia. So Russia's a big part of this thing in OPEC, and all of the agreements on the oil prices, how much everyone's going to produce or not produce. And Russia has a bunch of sanctions, and Russia has been saying like, hey, if you take our sanctions off, then we can agree to do a deal on whatever you guys want with the oil production levels. And the UN and America and the EU countries are all immediately just like, no, we're not taking sanctions off. And Russia's asked a couple times. And this week, Russia was talking with Italy and trying to say, like, hey, Italy, go convince them because you know how bad this health situation is. And we should make provisions to take the sanctions off because of this, the virus. And so that's what's going on with Russia. They have the sanctions on. They're trying to get their sanctions taken off. And this is kind of Russia's ace in the hole, is that they can overproduce oil if they want to. Like nobody can really stop them from doing that. And when they do that, it's just absolutely terrible for the rest of the world, the energy sector, and everywhere else in the world. Like Saudi Arabia is probably the only other place that can withstand that kind of low prices in oil, and it'll completely put the American shale out of business. Like even what's happened now and the projected prices for the end of the year is enough to put shale out of business. So that's a look at like the shale industry and oil exploration in America looks really bad right now, and the whole energy sector is just gonna get held down as long as this continues. And Russia has said like, hey, we can do this for like 10 years. Like our economy can handle this for more than 10 years. Nobody else's can, and you guys need to take sanctions off. Like this is what Russia has been doing over the past month. And everyone has said like, no, we're not taking sanctions off, and Russia's like, okay. So Russia this past week just brought their the Nord 2 pipeline boat. They brought from, it was over near China working on the China super pipeline, and they brought it around into the Baltic Sea, like near Germany, the sea north of Germany, like near Denmark, and that's where they were working on their pipes. And now Russia is just going to violate sanctions, and they're just going to build this pipeline. It's a natural gas pipeline from kind of near Finland in Russia down to Germany. And they already have one pipe, and they've had sanctions on the pipe, and they haven't been allowed to ship like full amounts of fuel on this thing over the last whatever 5 years or something. And they've been fighting with the EU and the UN trying to build these pipelines. And now they just finally said like, we don't care. Like we asked you to take sanctions off. Now we're just going to build this thing. And so they're just going to violate sanctions, and they're going to build this pipeline to Germany right now. They're building it this week, and they said they want to finish it by the end of the year, but probably is going to be sooner than that. Um, and then that is direct competition to the American shale. Like America is trying to provide Europe with natural gas, and they don't want Russia to supply Europe, and Russia's just like, we're going to do it anyway. Like that's what we're doing now. And if you don't take sanctions off of us, we're gonna peg these oil prices down as long as we have to until you do. So I mean, that's really the news that's going on right now with oil. Is the immediate projection is low prices to the end of the year. I mean, a little bump up in a month or two, but low prices to the end of the year, and then they could stay down. I mean, it's really hard to project oil far out, but yeah, these tanker companies are one of the only business models in the entire oil sector that do well in these conditions, and these conditions look like they're going to continue for a while. And the energy sector looks like it's in big trouble. The oil sector, and it has already crashed, but not really. I mean, like a huge percentage of the American companies that are doing unprofitable oil exploration or shale fracking, all those companies are in huge trouble. And then the offshore oil is like not as profitable as the onshore, and those are the next ones in trouble. Um, yeah, so well, I did a video on OXY, the Occidental Petroleum, because they're one of the biggest onshore American oil producers, and they do plastics, so that is like one of the oil companies that'd probably be one of the last ones to get in trouble. Um, but yeah, as far as trying to go long on oil, I think the tankers is what's up, because these kind of levered, the UCO and the USO like levered products and the futures contracts, you know, uh, it just really limits your upside just because of the way that the futures contracts roll over in the contango. So I really don't like going long on anything levered, and I don't like going long on anything that has contango going on like that, projected over the next couple of months. And yeah, I mean, there probably is an okay buy in some of the oil companies soon, like Occidental or like Exxon and Shell and those ones. Like those are not at risk of going out of business or anything like that. So there's going to be a low price on those at some point. Like when is that going to be? Is it going to be in a couple of weeks or a couple of months or like a couple of years? Like when are we going to bottom on that kind of stuff? And then what's the outlook on oil compared to alternative energy and that sort of thing? Like now, if oil is just crashing and it's unprofitable, I mean that could really accelerate a shift into alternative energy kind of stuff, and coal and just other energy sector stuff. So this is just an absolutely crazy sector right now, and the majority of the crash has been in oil. Like it's not as much of a stock market crash in general as it is. It's just a contraction period in the monetary system, and it's an absolute crash in oil. And these tankers are the thing to do. Like I've been trying to look up the best way to go long on oil for a while, and there's just really not another way to do it other than the tankers. I think these are the least risky and most solid business model in this kind of situation. Yeah. So I think that's probably good for this video. Um, I have a new little subscribe button thing somewhere over here. I think it'll be there. And please hit the like button to help me out with the YouTube algorithm. I'm trying to get to 1,000 views so that I can keep working on this channel. 1,000 subscribers, sorry. So I'm just kind of working on the little subscriber things, the little button and whatever. And that's what I have going on this week. I'll probably be posting a few less videos over the next week or two. But if you see any videos that you want to have me cover, I mean, this is a way longer video on the oil tankers than I was considering, but I think this is a really good look at them. And I think Nordic America is still getting a lot of hype and traffic, and people are freaking out about it. So I think this is a good one, kind of as a flagship, title to kind of get people to look at this whole oil industry and see what's going on. So hopefully, if you found this video just searching for Nordic, you can get a good look at the whole oil, the whole thing. It's just crazy. It's absolutely crazy. And yeah, I mean, man, if oil crashes again, it's oil's gonna cost less than coffee, and it's just nuts. But these oil tanker companies will be busy, and this is one company that if we even get a long-term bear market, like out over, you could get like a whatever. I mean, like Japan got like a 20-year bear market. When they reversed on the Nikkei bubble, they got like a crash and a 20-year bear market. It's possible that these oil companies, if we get into really, really long-term, like deflationary bad, stagflation, deflation kind of thing like that, like Japan did, which is not what most people are projecting, but I think that these tankers would hold up in that environment. And then if we reverse out into, kind of like higher inflation, then there's a whole lot of different things to take a look at. So we gotta just kind of take this thing a week at a time and just try to keep up with the cycles and see how this thing is shaping up, because it's really hard to predict where we are. We're kind of, we blew off the top of this everything bubble, and it's just a really volatile. I mean, the oil volatility is crazy. The VIX and the TVIX, the SHVIX volatility is still crazy. So stocks and oil are just risky right now. And yeah, so yes, this is not investment advice. Please be safe. I think that's probably overboard on this video. But we'll see it. We'll see if people, you know, how long people watch this. If you guys like these longer videos, I can make some longer ones. I've been making a lot of videos that are just like 3 or 4 minutes or something like that. And YouTube suggests to try to go for like 10 minutes. And usually when I make the longer videos, people just watch like 3 or 4 minutes anyway. So I don't know if it's worth it to try to make super long videos or not. But please, in the comments, let me know what you're interested in, and I will get it up there. I mean, we did some reviews on Amazon and Shopify. I don't, I don't know if I did Etsy yet. I was gonna do Etsy. I think I'll do that soon. Um, those online shopping ones are pretty good, and in lockdown environment. So everything is really, really changing right now, and we're gonna try to figure out what works in this environment, because we're in just a different world right now. It is a completely different investment environment, and that is what MMT investing is all about: is investing in this modern monetary crazy environment that we're in right now. So happy trading.